Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, giving you a quick midweek market update. So let's jump right into it. Got the dollar index here, 1 day candlesticks, and you can see that it's pretty much flat since the start of the week. Like we just about squeaked out these multi-decade highs. Where were those highs actually? 109.23 according to this chart on Monday, and we've been pretty much hovering in the 10800s ever since, awaiting key events later in the week, which from the US side of things is the ISM manufacturing PMI on Thursday, and then the official jobs report for August on Friday. And if we look across some of the other majors, you can see that, yeah, euro dollar pretty much range bound still in that parity area. Cable, it's been edging lower, to be fair. The economic data we've had out of the UK this week's been pretty alarming. Some of the forecasts as well, like I think we had Goldman Sachs talking about inflation in the UK rising to, like, I can't remember their exact number now, but it was like 22% they were talking about, and that as a result of energy prices, and that triggering a recession. So yeah, things not looking good there. Dollar yen higher on the week, sort of hovering just below those multi-decade highs. Let's look at stocks as well. A little bit lower on the week, but still the S&P 500 around that 4,000 level. And like I say, markets are very much sort of in wait and see mode ahead of some of these key events later in the week. Having by this point fully digested the hawkish message that we got from Fed Chair Powell last week. There's been plenty more Fed policymakers speaking this week who have all sort of concurred with that hawkish message that rates need to remain in restrictive territory, i.e., well, we don't know exactly where that's going to be, but let's say about 4% or maybe just below, maybe just above for some time, in order to ensure that inflation is coming back under control. Pretty much Powell and other Fed policymakers pushing back against the idea of premature easing, which markets up until fairly recently had been sort of hoping for rate cuts in 2023 to support the economy. Well, the Fed saying not so fast. And that's why we saw that big drop last Friday, and that's why we're still struggling this week. Um, in terms of some of the key data points we've had this week, we had some strong US consumer confidence survey data on Tuesday. That was a bit of a surprise. Markets didn't really like that at the time. And then we also had a very strong JOLTS job opening report, 11.24 million jobs at the end of July. 11.24 million job openings in the US economy at the end of July, which is nearly two for every unemployed person in the US, which suggests that labour demand remains very strong, which means that the US labour market at the end of July anyway was pretty hot still. Obviously, labour market's key theme with this data, the August jobs report coming out on Friday, and really what markets want to see, or what equity bulls want to see at this point, is an easing in labour market conditions. Okay, we want to see that you know the unemployment rate, I mean, as horrible as it is to say, some people want to see the unemployment rate rising. Preferably, that would be because of a rise in the participation rate, which doesn't mean people losing their jobs. It actually just means people re-entering the workforce. And we want to see these average hourly growth, average hourly wage growth slowing, because a tight labour market essentially is inflationary. So if that starts to ease, that will increase confidence that inflation is going to come back to the Fed's target. Okay, so that's why we're looking at that. What else have we had? ADP. This is like an alternative NFP measure that we get every month on the Wednesday before the Friday NFP data. And it was a bit weak, but it's been a very poor predictor in recent months, so people probably won't take too much stock from that. Eurozone inflation continues to rise. That's a new record high, by the way, 9.1% year over year. Core is at 4.3%. Energy crisis in the Eurozone continues to remain severe, with gas and electricity bills well beyond like 10x or 15x or even more above their historical average. Eurozone facing essentially massive stagflation. It's horrendous. And the ECB now looking likely to do a 75 basis point rate hike in, well, next month actually. But because of the poor economic backdrop, this is failing to lift euro dollar. Finally, quick look at oil prices. Pulling back from the highs they hit earlier in the week, unable to get above that 200-day moving average, which is there in green, or that 50-day moving average, which is there in that sort of reddy orange color. Now back below the 21-day moving average and back into the, well, back below 90 per barrel. Remember, we were in this downtrend, then we had a bit of technical buying, helped out by some supportive ideas about potential OPEC cuts. But now the focus seems to have shifted back to recession. And we had some weak Chinese data last night, PMIs showing that the country's industrial sector remains in contraction in August. So not really helping with the whole demand outlook side of things for oil. And to be honest, like against the current weakening economic backdrop where we're talking about stagflation in Europe and weakening in China, and we're looking at the US and we're thinking, okay, it's been holding up better than expected so far, but how long is that going to last? I mean, I don't think we can really justify getting oil above $100 per barrel, even if OPEC does start cutting. I mean, the threat of OPEC output cuts, because they did just forecast quite a hefty oil surplus for the end of the year, the threat of those cuts might be enough to keep us above these lows here. I don't know. We're going to have to see. Remember, I marked up that support here around 85. We're going to have to see, because if we also start talking about Iranian exports coming back online, because it seems that those talks have been reignited recently, then we could definitely be looking at a drop towards 80. But yeah, guys, that's pretty much it for this video. Hope you enjoyed the midweek market update, and I'll see you all in the next one.